What really happened at HDFC Bank? $16 billion lost. India's largest private lender, HDFC Bank is facing a major market shock, wiping out billions in investors' wealth and pushing its stock to a 52-week low of around 770 rupees. So, what caused this sudden crash? Let's break it down. The biggest trigger was the sudden resignation of the bank's chairman, Atanu Chakravarti. Now, leadership changes are normal, but this one raised eyebrows because of what he said while stepping down. In his resignation, Chakravarti mentioned that certain happenings and practices within the bank over the past 2 years were not aligned with his personal value and ethics. That statement was short but power enough to shake investors' confidence. And that's where the panic began because in banking, trust matters more than anything. Following the news, HDFC Bank shares fell nearly 8 to 10% in a single day, hitting a fresh 52-week low. Within these, nearly rupees 1 lakh crore, that's around $12 to $16 billion, was wiped out from its market value. But this story goes beyond just one resignation. There are multiple concerns that may have contributed. First, internal disagreement at the top. Reports suggest that Chakravarti had differences within management, including with CEO Shashidhar Jagdishan. There were concerns over leadership decision, including senior appointment and board level roles. While such disagreements are not unusual at this level, they can signal deeper governance issue. Second, allegation of mis-selling financial products. Between 2019 and 2022, some reports claim that NRI customers were encouraged to invest in 81 bonds by shifting deposit overseas. These were presented as safe investment option, but in reality, they carried high risks. When Credit Suisse collapsed in 2023 and was taken over by UBS, these bonds were wiped out, leading heavy investor losses. This raised serious concern about how such products were sold. Third, legal controversy involving Leelavati Hospital Trust. An FIR was filed against CEO Shashidhar Jagdishan and others over alleged financial misconduct. The allegation includes misuse of funds and improper financial dealing. However, HDFC Bank has strongly denied all claims, calling them baseless and linked to a separate loan dispute. The case is still under investigation. Fourth, external and global pressure. Rising oil prices and global market uncertainty also contribute to the overall fall. And because HDFC Bank has a strong weight in the stock market indices, its decline affects the broader market as well. So, now the big question, is HDFC Bank in trouble? According to the Reserve Bank of India, the answer is no. The RBI has described that the bank as strong and stable with solid fundamentals. To address the concern, HDFC Bank has taken steps. It has appointed legal firms like Wadia Gandhi and Trilegal along with an international firm to review the situation around chairman's resignation. An interim chairman has also been put in place, but despite this reassurance, investor sentiments remain cautious because markets are driven not just by numbers but by confidence. And right now, there are still unanswered questions. What exactly did the chairman mean? Are there deeper governance concerns? And how will the bank rebuild trust? For now, experts believe this is more of a sentimental driven fall rather than a financial crisis. Some even see it as long term buying opportunity, but in this short term, uncertainty remains. This is not just a story about falling shares, it is a reminder that in the financial world, governance matters as much as growth. For further such updates, keep watching the Sikkim Today.